Good day everyone, Alice here from Sophie Financial Network, and today we are talking about Netflix. Yes, Netflix just after earning announcement yesterday and slaughtered, and today when price just opened up, lots of people were saying still it is cheap, but after opening bell today, price just kept going down and everyone just wondering what happened exactly with that letter, with that earning announcement. And in this video we're going to talk about the letter, the earning announcement, and after that we're going to check out the technical analysis and see what's the price exactly, what's the value for the price, and where price is heading to. So just be careful on the Netflix and make sure watch this video until the end, because lots of good materials are gonna be followed in the next minutes. All right, so Netflix went down crazy after earning announcement just yesterday. It went down 122 points, which is 35%, and just relaxed or settled at 226.19 cents at the closing bell. That is wow. Yes, that is wow. And here's the chart. Look at that. So today, just earning announced yesterday after closing bell, and today opened up with a huge gap and just kept going down. So what was in earning reports? I just extract some sentences and just highlight it for you folks. Here is the earning report for the Netflix, and to be honest, I should say the earning letter was very interesting, just because they were pretty conservative and they were very honest to their shareholders. And as you see here, they were saying our relatively high household penetration, when including the large number of households sharing accounts combined with the competition, is creating revenue growth headwinds. So what does it mean? So Netflix noticed that lots of people are sharing their subscription. Just imagine you have got your cousins, your friends, and instead of both of you or a couple of families together just buying Netflix subscription or paying Netflix subscription fee to just use their videos, their programs, whatever, they're just sharing. They just one person just pay the subscription and share the password to the other households, and they just sharing the Netflix programs. And that's the problem, and Netflix just noticed that one, and they wanted to stop the sharing. And the other thing that Netflix just mentioned is because of the COVID boost of the streaming, earning for 2021 just spike up, doubled. Like everyone after COVID crash 2020, they just sit at home and stuck in their place, and they had nothing to do, just watching Netflix, right? So everyone just paying to the Netflix. The members actually just growing higher and higher, but there is a limit, right? There is a ceiling at the top, and Netflix just hit that ceiling pretty fast in 2020 and 2021, and everyone just sharing the subscription. Netflix noticed that, oh my god, so I'm just losing money because the members that are using my programs are a lot, but I don't receive that revenue. So that is the problem, and Netflix noticed that one. And the problem number two is Netflix hit the target, like the maximum number of the subscriptions that they can pay to the Netflix was hit when? Last year. And after that, people are getting back to work, getting back to the office, getting back to the normal recently, and they just canceled their subscription, right? So they just don't want to watch Netflix as much they did before. So here is the earning which just announced. Here's the revenue, and as you see here, revenue just going higher. This is a 12-month, which is a steady, like last every quarter it was a steady and just going higher and higher, which is pretty good. But the problem with Netflix is marketing price is getting higher as well. And also the problem with Netflix is they need to be creative, which we get to that one after that. Netflix just lost its moat, which is the lots of competitors in the market that competing with Netflix, and right now Netflix has lost its moat. Here is the cash flow statement, and as you see here, the cash flow statement net income is getting doubled, as I said, because of the members just getting spiked up due to COVID, but they're coming back to work, and it doesn't have the previous years or years before 2020, but I just double check, and the numbers are going up very, very slowly, and this number just getting doubled due to COVID. And Netflix noticed that this one is coming back down to this number or pretty close to this number. So we have lots of, Netflix has lots of capex, which is capital expenditure, lots of R&D, and lots of competitors in the market, and Netflix needs to beat them. So they need to provide a better program. They need to spend more money to just stay live in the market. And growth outlook by Netflix is pretty interesting. So they said they have 4 problems down the road. And here is their sentence exactly. So we are not growing revenue as fast as we would like. And they just mentioned or categorized 4 problems and 4 reasons. The first is increasingly clear that the pace of the growth into the underlying addressable market. So the market is hitting the ceiling. So they don't have anyone else to reach out, basically. They just hit the maximum target in 2021 and 2020 due to COVID. And after that, there is no one else that Netflix can reach out. So that's the very, very important one. And the second one is 222 million paying households. We estimate that Netflix is being shared with over 100 million additional households, which is half of these members. So just imagine Netflix assume 322 million households watching Netflix program, but just 60% or 2/3 of them are paying, and 100 million are shared within this number, including over 30 million in North America by itself, which is a lot. And Netflix wants to monetize those people there, and they just put strict monetary policy or strict policy to cut the shareholds or just make it transparent for itself. Like, we will get back to the solution in a minute. But the third problem they notice is competition. Obviously, Netflix has a big competitors right now. They mentioned YouTube, which is for Google, Amazon, and Hulu. And the other one they didn't mention, but this is very important, is Disney. And Disney is coming to the TV streaming, and basically very, very important competitor for Netflix as well. So they said in order to beat them, they need to be more creative, and that makes Netflix expensive, just because creative means more R&D, more research, more people, and more investment into research. And being more creative means you don't have economic moat, basically. The fourth one is macro factors, including sluggish economic growth, which Netflix is heading toward. Just to give us a hint that we are getting to the recession or so. It doesn't say that, but they said probably economic growth is slowing down, increasing inflation, geopolitical events such as Russia's invasion of Ukraine and some continued disruption from COVID are like having impact us as well. So basically Netflix lost all of its members in Russia and Ukraine just because they just stopped servicing to the Russia, and they just put them into the report as well. So what's their solution? They just say, okay, we try to, first of all, being more creative. We're gonna spend more money to create more and better entertainment program to just beat our competitors. So that is more money for more money is getting out of a Netflix pocket into R&D just because they need to be more creative to beat their competitors. The second one is they want to monetize the sharing households. Over 100 million households are using another household's accounts, which is the main goal for Netflix. And also during all of this I should say sugar-coated sentence, they said during this period of a slowing revenue growth. So they expect Netflix revenue growth is going down or slowing down, which they want to make. They want to take more strict plans for these 100 million, which I assume they're gonna lose more members in the next months. So that is very, very important for Netflix. And what's the intrinsic value for Netflix? I don't want to get to the calculation because that's going to be too much for this video. But if you want see my calculation, you can just join us to our classes. But anyway, here is my calculation. So close price for today's date, oh, this is not today's date, sorry, this is 20th, which I have to just correct this. But anyway, so today's date, closing price was 226. Intrinsic value based on my calculation and net income calculation is 191. And Netflix is 17% still overvalued. Just imagine with that sharp sell-off today, still 17% overvalued. And that is a lot, to be honest. And that's why I don't want to invest in Netflix. Even I don't want to trade it. But let's go to the chart from technical point of view, see where are we at in the chart. Okay, here is the monthly chart for Netflix. And as you see here, Netflix was growing higher and higher and higher, all the way up to 700, I would say. Yeah, it just hit 700. And look at the price now, just after 5 months, it goes all the way down to 226. And right now we are coming back to this wide range bar, which is kind of institutional level. And I'm sure that there are lots of support here down there because this is monthly chart. This is not daily or weekly. This is monthly chart. And this level tested once, twice, and then going off to the rally. So right now we are coming back there. So you can see a bounce as we did today. You can see a bounce. However, I'm still looking for probably going down to 196 area to test this area as well, or even lower. But before that one, I want to show you something pretty neat that is very, very interesting, and everyone needs to use that one as well. So if you use Fibonacci retracement, and if you go from this low all the way up to here, just let me just adjust it a little bit right there. So here is the level, 78%, which is 156, and going to this wide range bar. So I would say Netflix can go down all the way to here, and that would be good buying level. Because first of all, that is going to be undervalued based on my calculation. 191 is the value and 156 is going to be undervalued. And secondly, that's going to be very, very important level, 78% Fibonacci, and coming to this wide range bar before the breakout. So again, I'm not going to invest in Netflix. Even I'm not sure if I trade it or not, because there are lots of better opportunities down there to trade. But if someone wants to take Netflix trade, for sure, you can just try at this level as well, based on the monthly chart. And if you go to the weekly chart, here is the weekly chart. As you see here, nice consolidation, breakout, and then it doesn't work, and then going down, smash down all the way here to this wide range bar again. So there is a support here. There are tons of support here. I'm not surprised if you see Netflix is coming back up. So if Netflix goes back up, so what's the price that you think Netflix can go down? Huh? All right. So if just imagine you're here and you nail the bottom. This is the bottom. Just imagine. There is one simple method that you can use. Here's the one. So Netflix can go back up again to this level, to 327. And that would be the end, I would say. That would be the end for Netflix if it goes back up there, because there are lots of resistance right there. So just imagine all of these supports here are going to be resistance. So that is very important for you folks if you want to see what's the maximum upside target for Netflix. If there is a bounce, I'm not saying there is a bounce, because yes, there are lots of support here, but again, probably it goes up and then down, up, down, or Netflix will be dead for next couple of months, I don't know. But if Netflix has a bounce going all the way up to here, probably 327, that would be the end of upside target for Netflix, and then we should see another spike down to 156. That would be good level, to be honest, for buying Netflix. And here's the daily chart. As you see here, I just show you a snapshot of the daily chart, but this is pretty interesting. This is reverse head and shoulder, and this is failed. And best moves comes from failed pattern. And look at that. So it just fell all the way down to here, even below this level. And look at the COVID crash, by the way. So COVID crash was just a small pullback within the uptrend. Even lots of stocks actually going down below these supports. But COVID crash for Netflix was nothing. Actually, it was a gift, just because everyone stuck at home watching Netflix, and price just go off the rally easily, and then consolidation going up, breakout, and that is, I would say, multi-year top for the Netflix. I'm not sure if Netflix is coming back even above 500. This gap is very, very, very important gap for Netflix, from 500 to 400. And we have another gap, second gap, which is pretty significant, because that one goes below COVID crash. It seems like there is no buyer here, because everyone expecting this is institution level, everyone just dumping money into the stock market, and this should be very, very important support. But as you see here, this level was nothing for Netflix. Netflix just goes down like a hard and hot knife cutting the butter. And this just happened. All right. So if you like this video, please give us thumbs up and smash the like button. If you have any question, please just put your question down there in the chat box. I'm gonna just answer that. But again, I'm not gonna be investor in Netflix. I don't like this company at all. There are lots of better opportunities. But if you like this this stock, or if you just tie to this one, I'll just show you the level that you can trade and maximum target. Have a wonderful day. See you on the chart. Bye bye.